Joining us with some of his favorite names is the analyst behind that call, UBS's Peter Grom. Peter, great to have you. You do point out a lot needs to happen on the macro in order for the whole sector to shine, right?
Yeah, I mean, going back to the earlier segment, given what we're seeing across the broader market, if this continues, it's going to be very difficult for staples to see relative outperformance.
That said, you do have some favorites. Talk about which ones and why.
Sure. I think as we look out to next year, obviously, as I alluded to, the sector performance is going to be very much, in many ways binary and dictated by the macro. But within, consumer staples, investors often look at whether it's beverages versus household products versus packaged food. And we don't really necessarily see any key, category sector themes as we look out to next year. But we actually think that large cap multinationals could fare better. And it's really quite simple. We just see, earnings growth as we look out to 2024 favoring this group. FX, at least for now, appears to be less onerous. And, look, our UBS economics team is expecting emerging market growth to accelerate relative to developed market growth. And so we think this should drive better bottom line growth. And look, over the last 20 years, that hasn't happened all that much given the strengthening of the dollar, but the years that it has happened has typically resulted in outperformance for many of these multinational names. And in that light, we continue to like Coca-Cola and Colgate-Palmolive.
One of your peers on the street this morning cuts Pepsi, and they say we prefer Coke and KDP, but they also add that the narrative overhang from GLP-1s has been pretty stubborn and, in their words, tough to disprove. I wonder what you think about that.
Look, I think there's still a lot of uncertainty as it relates to GLP-1. I think investors have kind of digested the fact that this is going to likely be a long-term headwind. How, when, the magnitude at which it plays out, I still think is very much uncertain. I also think investors have kind of taken a step back and looked at this and said, look, in emerging markets, this GLP-1 dynamic might not necessarily be a headwind at all. And I think, look, if you look at some companies within our core coverage, volume declines have been structural, carbonated soft drinks, et cetera. And so, look, these companies have, avenues to continue to drive growth, top line growth, even if volumes remain under pressure. So I think there's still a lot to be determined here. But yeah, I think there's, it's certainly a risk as you look out longer term for sure.
Wouldn't the companies argue, Peter, that we finally have easing pricing pressure so we can finally get some volume growth, and that will be a source of growth in 2024 where they couldn't do that previously?
Yeah, I completely agree. I think as you look out over the next, call it like 6 to 12 months, I would expect the rate of volume growth to improve here, particularly as pricing comes down. But, as we saw on the way up, elasticity is held in better. It doesn't necessarily mean that just because the rate of price increase is lower, that this means a big snapback in volume. But we do expect kind of category growth to kind of return to normal. And I think in many ways, that's kind of our view on the sector as a whole, where you have greater visibility to durable top line growth, which we view is likely going to be more volume weighted over the next 12 months. I think those are the stocks that are going to outperform, in the current environment.